Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Sonali Basak in for Caroline Hyde. We're counting you down to the closing bell on this Monday afternoon. Here to help take us beyond the bell, it's our global simulcast partners, Tim Stenovec and Kriti Gupta in for Carol Masser. We welcome our audiences across Bloomberg Television and Radio, as well as YouTube. And Tim, quite a day here. Yeah. Not a whole lot of conviction in the buying, not necessarily a whole lot of conviction in the selling. Mix it all together, and we're basically flat on the day.
Yeah, equity investors really can't make up their mind with what they want to do today. The S&P 500 seeing some tiny gains toward the end of the day, but still moving between gains and losses 9 times today. So really struggling to find that direction.
And this really speaks to the idea that, yes, light volume, but I think volatility hasn't necessarily taken a hit here. A lot of this driven by the angst, I think, around the Twitter story and, of course, Tesla as well, both of which have been moving when you look at an index basis. Something also to keep in mind is this is pretty common, right? Selling into the close. So no surprise here, but I'm curious if this continues into tomorrow.
You talk a lot about how many different times, 9, I believe you said, Tim, of switching from gains to losses.
I went through and I counted when I went GIP on the terminal.
Good math.
Yeah, thank you.
Did you count?
I don't know the Bloomberg
fingers,
function
like
for this yet. I've only been here for almost 2 years, but I'm sure there's one.
Wow. Yeah. See, he's so good. Sonali, I punt this on over to you because we go similar to a VIX as well that had been lower, higher. We again turned lower on the day and still a very low, just 22 handle.
Yeah, quite low compared to what we've seen, certainly. But you've got to wonder what's under the surface here, Taylor. We know that leverage is still quite high. And so can Wall Street afford a bigger loss than anything we've been seeing?
And, of course, you talk about volumes being tamped down. We're about 10 to 11% with regards to trading across the tape below where we would be not only on last Thursday, but about 11-12% below where we were over the 12-month average here. We should point out, of course, we had that shortened holiday week last week, and, of course, Passover still going on, so that's going to have a little bit of a dampening effect as to who's around to trade. The Dow Jones Industrial Average looks like it's going to finish the day down about a tenth of a percent, about 38, 39 points. The S&P, let's just call it unchanged on the day. It's down less than 1 point, while the NASDAQ composite is down about a tenth of a percent or 19 points. The Russell 2000, and we should point out the NASDAQ 100, by the way, did actually poke into the green right here at the close, and that's going to finish higher by about a tenth of a percent. The Russell 2000, Taylor, are going to finish the day down by 0.7%.
Yeah, you look at what actually moved today. The 196 stocks in the S&P 500 moved higher, though 306 declined. So in terms of what actually moved, things were flat, but there was more conviction when it came to selling.
Yeah, you know, Tim, it's interesting that you say that. You certainly see that on a sector level. Here, of course, for the radio audience, we're diving sort of 2 levels underneath the surface. Really get a broad sector view, the sector winners, the sector losers. There's a lot of red, even in some of the, quote, best performing sectors. That tells you, right, perhaps going to be more conviction to the selling. I will tell you, though, what did end up in the green, Kriti, of course, semiconductors, auto components, energies. Those all sound sort of pretty classic risk on banks as well. So we talked a lot on this program about that re-steepening that continues again of that yield curve. Bank of America really sort of wrapping up sort of the big financial earnings seasons. Down on the bottom, though, it also looks a little bit defensive when you're thinking about durables, right? And food and staples, some of those household products as well. Those are the big sectors that lost today. You're off about 1% for each of those, Kriti.
Yeah, Taylor, when you mentioned what's in the green, that's really what caught my eye here. Talking specifically about those auto components and those financials, because look at what some of the major movers are, and not just movers, index contributors. Bank of America, for example, gaining on those earnings that they came out. It's not just trading revenue. For me, it was about that loan growth, because that, from a macro perspective, really signals the health of that consumer. And you really saw it take the rest of the financials with it. Tesla as well, potentially looking to reopen their Shanghai factory. We know this is a broader push from Chinese officials to really get things moving again after that COVID lockdown. Let's see if that actually happens, especially with that closed loop system that they are preparing. And lastly, EQT, the commodity space, natural gas prices at a 13-year high, hitting above $8 for the first time since 2008. So EQT, the largest natural gas producer in the United States, of course, catching a bit off that.
All right, you got the gainers, I got the decliners. Starting with Charles Schwab, shares having their worst day since March of 2020. A lot of earnings stories to report and a lot of companies reporting this week and next week as well. Schwab finishing the day down by 9.4%. First quarter profit and revenue missed analyst estimates. The stock being punished today as a result. Shares lowest since October of 2021. BNY Mellon shares down 2.3%. Shares actually hit a 52-week low today. This after the company reported revenue that came in lower than the average analyst estimate and said that it will, quote, remain cautious on buybacks in the near term. And look at this. DD Global finishing the day down by more than 18%. We're talking ADRs here tumbling after the Chinese ride-hailing giant said it's planning to delist its U.S.-traded shares before it finds a new venue for the stock. The company will continue to explore listing on another internationally recognized exchange, but DD said that it will not apply until after the U.S. delisting is finished. There's that general meeting that's set for just about a month from now, May 23rd, to vote on delisting its shares from the New York Stock Exchange.
We'll round it out cross-asset, Tim, as we always do here with yields, and it is a yield climbing sort of day. That's been sort of a consistent message that we've seen, that further re-steepening of the yield curve back up to about 39 basis points or so on the 2s, 10s. But really, it's that long end, right? When you think about some of these long duration assets that have been the real underperformers, when you think about bond price lower, yield higher, 3-4 basis points on the day, a 20-year at a 313, a 30-year, of course, at a 295, the 10-year, of course, holding in there at a 286. And Tim, this is sort of interesting because we were just speaking with Richard Bernstein over at Richard Bernstein Advisors, and he was saying, don't forget, credit is a leading indicator. Credit spreads are nowhere blowing out. So talk of recession feels a little bit early if you're taking your cues from the credit market.
Okay, so what do you mean by early? Are we talking early by in 2022 or Romaine 2023 and 2024, like Goldman Sachs sees, for example?
Yeah, and Bill Dudley, of course, former New York Fed president, making the similar argument here that this could potentially be a recession coming, but one that maybe is a little bit more far off, looking at 2023 and 2024. And a big part of the reason, I forgot who brought it up here, but you talk about what we saw out of the bank earnings. There was a great chart in one of the Bloomberg stories that kind of showed the credit card spending at all the big banks here. It was higher than where it was in the previous quarter, in the quarter of 2021, Q1. So it shows they're all spending. There are a lot of, doesn't involve? No, I'm sure it's not.
You know what's interesting about this, too? Credit card spending up, but at what interest rate and for how long does that start to go up as well?
But balance is down. Which is a good thing.
But people are spending, and I mean, that's the idea. There's a lot of pent-up demand, a lot of travel. Our did you know there's a marriage boom? I hear our producer's getting married. That's going to cost a lot of money.
Yes. Don't embarrass our sweet producer. She's getting marriage as part of the marriage boom.
Yeah, that's a lot of money there. But yeah, this is a big idea here. And then, of course, there's also the issue that we talk about, too. It's not just about consumer spending, but it's also about business spending as well. And I guess there's some right sizing of some of the supply chain disruptions. We are keeping an eye on earnings crossing the wire right now, including J.B. Hunt. We do want to bring you that right now here. It looks like the revenue for the quarter did come in slightly above estimates at about $741 million. The EPS number coming in at $2.29 a share. The street was looking on average for $1.94. Operating revenue, $3.49 billion. The street was looking for 3.29 billion shares. Higher, Kriti, right now in after-hours trading.
Yeah, Romaine, I'm just going to go back to that recession conversation because I think something that you're going to be hearing a lot when it comes to this earnings season, similar to perhaps the moves that you're going to be seeing in J.B. Hunt and the commentary, is the difference between an outright recession, demand destruction, and slowing growth. Those are three very different things. And we started off the year talking about, well, this is going to be the year of slowing growth. It evolved into demand destruction with the war in Ukraine, and now we're talking about an outright recession. But I think those three things really need to be parsed out. Taylor.
Yeah, and parsed out by the years. I think we're trying to do a reasonable job of understanding that 2022 is, I think in a lot of people's words, not even a probability at this point. You really have to think about next year and the year before. And Romaine, not to pick on you too much, but as we think about nominal versus some of the real spending as well. And if we're still buying food and it just costs more, that puts credit card spending.
Can I also just point out real quickly, we are getting some headlines out of the St. Louis Fed President Jim Bullard, who is speaking at a CFR event, kind of reiterating some of the comments he's made about the Fed needing to keep inflation under control. He's hopeful that the balance sheet runoff will start at the coming meeting. He also says we, quote, need to get to neutral very soon, in his words. But he also says he doesn't want to disrupt markets, but they need to move quickly. So kind of reiterating what he said, but it shows you the sense of urgency that we're actually hearing from a lot more Fed members, more so than what we heard a few months ago.
We get a little more into earnings season, too. Bringing up J.B. Hunt again, one of the expenses they name is the net interest expense rising. Guys, we have to remember that they're going to be paying more for their debt. So we're going to watch closely how much that debt load matters as corporate America levered up ahead of this season.
Well, speaking of the season, earnings season kicking off in full force. We got Netflix and IBM tomorrow. We're also going to hear from Tesla later this week. Looking forward to hearing from Netflix about what they're seeing around the world and here in the United States when it comes to pricing power. And another question about the health of the consumer, because it's pretty easy to quit that Netflix subscription if you've got nothing to watch.
Yeah, Tim, you and I were just talking about this on radio, right? Great reporting coming out of one of our competitors, actually, about simply the cost crisis over in the UK. The first thing they cut is going to be those gym memberships, those streaming subscriptions. So let's see if that shows up in Netflix's earnings and their forecasts.
All right, Tesla.
The gym membership.
What'd you say, Taylor?
Why would you do that?
Why would you cut your gym membership?
I don't understand.
Because they don't run marathons, Taylor.
Run outside, right?
Oh, wow.
All right, to be continued. To be continued tomorrow.
Did you see, hey, Tim, I was watching
Yeah.
this video of you. You were riding in one of those little three-wheeled cars?
Yeah, I got to go
What was
last
that?
week.
That's a Solo,
This is
right?
the Solo, yeah. About
Is that the future of driving?
$18,000. If you're driving by yourself, it could be. 100
Driving by
miles.
yourself.
100 miles on one charge.
You're going to drive that through the streets of New York?
I'm not. I got nowhere to park it. You know, still, even though it's tiny, I got nowhere to park it. That is going to do it for our cross-platform coverage this afternoon. We are going to be back tomorrow, same time, same place, for many more earnings before the bell and beyond the bell. This is Bloomberg.